We're going to talk about some ethical considerations related to costing and pricing. So we know that oftentimes managers, they're going to receive bonuses based upon their profitability during the current period. And so when production is going to be greater than sales, the absorption costing method inflates the operating profit. And so deliberately overproducing inventory in order to raise short-term profitability, it violates the IMA standard for integrity, and it can lead to increased costs and risks. So we can't just overinflate our production and overproduce in order to make it look like our profits are higher when they really are not. And so what can happen is when inventory is overproduced, our variable expenses would increase. Cash that is used to pay suppliers and employees and converting that cash to unsold inventory. So if we are using our cash for unsold inventory, then that's making it more difficult for us to pay our suppliers, our current suppliers, and our employees and other expenses. Interest expense is going to increase because the company might have to borrow in order to replace the cash that was used by overproduction. And there's also a risk that the inventory cannot be sold, especially if it's perishable or if it's an item that becomes obsolete. Okay. So we just really have to be really aware of that. Variable costing not only helps us to promote integrity, but it also can help improve the financial health of the business by avoiding the costs and risk of inventory overproduction. So in this sense, for determining our price, we might want to use variable costing here because it helps us to see more clearly exactly what is taking place. And it helps us to maintain our integrity of what we're doing.